Welcome everyone. How we doing? Rudy, what's up? Good to see y'all. How'd everybody's day go today? Was a fun one if you were on it. Good one for me, Rudy. Pretty fun, few trades. Started a little late today, so played a little catch up, but I got trading somewhere right around down here. The Nvidia swing, were you long swinging? Oops. Ooh, ooh, tricky. Yeah, that was a tricky one. Nice though. Happy to hear it, the risk with that thing. I mean, it is nice these days, like whether people realize it or not, Nvidia is about 1,000 times safer to trade than it used to be. At least now when it gaps against you, it's a buck or two. It's not 40. That really increases safety on that thing. Yeah, Rudy, don't feel bad. That's you know, uh I know you trade a lot of SPY and QQQ. This type of action, people hate. I mean, this is not what people like to trade, unfortunately. I mean, it doesn't matter, if it's not what you like to trade. Just kind of the trick to it is uh understanding what's going on in the market. We'll even be talking a little bit about this today of just, building your bias in the market, reading the market, seeing what it has to offer you. And then you know, if you don't like range trading and we set an early high, somewhere up here. We set an early low down here. Like this is 2 hours into the day. Now here's and just ignoring the opening range, ignoring any of that, just real basic, here's the high, here's the low, here's the range we're in. As long as we're in there, don't go looking for big old breakout trades. I mean, and it's of course, we all know you get to look back at the end of the day and say, oh, well, I probably should have grabbed onto that earlier, but everybody misses it sometimes. And then on something like this, just play that range, and know that that's the range we're in. So if we're anywhere up towards these highs, you want to be short. If we're down towards these lows, you want to be long. And in the middle, you don't want to do nothing besides a scalp. Welcome everybody. How we doing? Hope everybody had a good day. Love seeing the regular team in here, dude. Lambos, always. Wonder what the last class Lambos missed was. Uh, Great question. Uh, I don't at night, like I don't get on the computer at this time of day and look for what I want to trade the following day. Uh, that's just not what I like to do. I think people should do it. The difference between me and a lot of other people is, this is my job, and so I spend all day on the charts. That's what I do. And so most my charts, they got the levels, they got the things that I need to trade. I mean, if I want to if there's something I want to look at, I can typically, something like AMD, everybody loves to trade AMD. I mean, if I go to my daily chart, I have all the information I need. So I can glance at this really, really quick and say, hey, if we're outside of this range, I want to be short. If we're breaking back into this, I'll try to play some longs off the bottom of it. So I'm lucky because my charts are ready. I know where I want my trades. I know how I trade. I know the rules for trades that I take. And so because my charts are ready, I don't necessarily need to go hunting for, the setups into the day. When I start in the morning, I start a little bit early and I just kind of scan through the things that I like to trade. And we're going to talk a little bit about this today. But we'll give it a few more minutes. I know attendance been pretty low in all the lectures lately, but hopefully we'll pull a few more tonight. But so I know what I want to trade. I know how I like to trade. So for me, really all I'm going to do in the morning is I'm going to take note of pre-market high and low. I think those are crucial. I think everybody should take note of those. And that's really all I'm concerned with early. And then the next bit of TA I'm going to do, and I have that indicator like everybody knows for the opening range, and I run it on my charts. And so the next thing that I'm concerned with is that, my time 8 o'clock. When is that opening range set, and what am I, how can I trade around that? And so that's what I do. However, if you like to get on and plan your trades and do all this and that night before, so you are ready for the day, I highly encourage that. Any time you can spend on the charts is awesome. I just spend a lot of time on the charts anyway as it is, so I don't necessarily need to spend any more time. But if you're a swing trader, you better be like analyzing those charts in the after hours to know what you're going to do. I mean, if you want to be a swing trader and you're ignoring those long time frame stuff and not analyzing the market, you're just going to get smoked left and right forever. Husky, how we doing? Lambos, yeah, dude, I don't know when the last class you missed was. Oh, give me 1 second. I don't got an announcement today, so I got to make my own. Yeah, you got it, man. No problem. Oops. Okay, just gotta do one more thing real quick. Sure. Okay, welcome everybody. How are we all doing? Hope everybody had a great day. Dirty River, happy to have you here. Same spiel we've been getting for going on 7 or 8 weeks or something now. For anybody who doesn't know, I'm kind of doing a series, all of my classes lately, trying to do them in order so I can get them pinned in my tab in order. So hopefully they are, nice and easy to access. Then if you ever want to go back and reference something, what would my thoughts be on a trade, or, how do I use EMAs or the opening range? Any of those questions, you'll be able to easily access the lecture for it. I'm just kind of waiting until they're all done, and then I'm going to hopefully get them all pinned in my tab in order. So, and order isn't super important, but at least, if you want some refreshers on some of the things we've talked about in these classes, we'll be able to do that. And so tonight is going to be a really fun one. I think it's fun. We're going to talk price action tonight, and why, how to trade the chart. And people hear me talk about price action there. Other people talk about price action sometimes, and they don't know what it means. And so what price action is, in really its simplest terms, is really just removing any bias you have for the market. It's fine, if the market's ripping upside over and over again, it's fine to have that, the overall bullish bias. If the market's just dumping left and right, we get another 2022, it's fine to have that bearish bias. However, you need to trade what the chart tells you. We see it all the time, in trade floor and even in lectures and in voice chat, obviously not when Flips is in there. He doesn't trade like a degen. But we see it all the time where people, and I even said in my post, oh, I need NVIDIA to dump. Well, maybe you should be asking yourself at that point, why are you short on NVIDIA? There's no denying that NVIDIA is selling pretty good right now. It's been putting in some bounces, obviously, but don't be bearish on NVIDIA. Overall, it's fine to play some shorts when the opportunity presents itself, but you need to play what is on the chart. And it all goes back to what I always try to teach people is admit you're wrong. Everybody's wrong trading sometimes, I mean, I stopped out on a trade today. I was wrong on a trade today. Everybody does it. People hate to click that sell button when they're wrong, but you need to trade what the chart is telling you. And if the chart is telling you, hey, it's going to go up, then quit trying to short it. And if the market is telling you, hey, it's going to go down, quit trying to long it. You can of course try to take some technical bounces. We're going to touch on that a little bit later. It's something, I do it all the time. I alert them in my tab in some of the, group chats where I talk with a few friends. They know if I'm talking about a trade, there's a pretty good chance it's going to go fast. You're going to be right or wrong in those first couple seconds. And that's how I like to trade. And how I find those trades is really just reading price action. Price action tells us we can read the candles, we can look at the trends, it encompasses everything in the market. But overall, what it's telling us is, where does the market want to go? Whether you're starting on the big picture, those daily time frames, those 4 hours, which is of course where we're going to start tonight. It's where you should always start, or even down to the 5 minute. Most of us are day traders in here. We do have some swing traders in here, but swing trading is just, if you aren't doing it right, you can just accrue such huge losses. And have to stare down losses, really, really ruin any opportunity cost you have in the market by being stuck in one trade. So over the years, we've really, really watched the people in here, not only most of the analysts, but the members. They like day trades, and I like day trades. I hate taking, well, I swing things a lot, but small positions, things I don't care about, trades on, something that I think might happen, but I'm never swinging whole positions. I just don't do that kind of thing. There's no reason to stress at night. And we have such a volatile market right now. Why swing? Just trade the chart in front of you during the day. There is so much money to be made that you don't need to sit in a trade for a week and stare at it down, 20, 30%, whatever it is. There's so much opportunity in the market that a lot of the time, and especially as we've started to see some consolidation on some names, or uptrends switching to downtrends, those kinds of things. A lot of the time, there's just more money to be traded or made more safely during the day. And so that's what most of us focus on. And for those of us that are, big scalpers, flips, he might not think of it as price action, but he does an amazing job reading price action, reading the charts. It tells us, where do you want to enter? Where do you want to stop out? Where do you want to take profits? All of those things, you guys know me, I beat the drum on, if your entry's bad, your trade's bad, that's just the facts of the market. If your trades go down a lot before they ever see green, then chances are your entries need work. And shoot me a DM, let's work on that. But we're going to talk about, price action tonight that will help us, make the right decisions, make the informed decisions, so that we can hopefully stay on top of the market. We'll see how it goes. Price action is one of those things that, something can work a lot, and then it can go on a losing streak of just not working. Those types of things can happen. So what we're going to start with, as with all things, is just big picture considerations. What are we looking at in the overall market? Where do we want to be? Where do we want to be trading? And what are these? Always with the joke lines. What is the market telling us? And so, I wonder, that one's not actually blank. We'll just clear this. So what is the market telling us? Obviously on SPY, zoom out, the trend is up. Like, if you're bearish, you're wrong. I'm not saying chase calls on every green candle, obviously nothing like that. But if you're bearish, you're wrong, and that's fine. But just always zoom out. We can look at these things, just strong uptrends, riding EMAs, holding EMAs, all dips being purchased. Even, we had one nice sell here a couple of months ago, for 2 weeks, a week and a half. But dips are being purchased. We're obviously getting that little lull in volume going into the summer. But when we look at these pictures, or, the big picture, what do we want to look for? Always look at the huge picture, zoom way out, look at it. Okay, we're bullish. Now, the next thing we want to look for, any sort of trend that we have going on. Obviously this is, at least to me, our most major trend right now. And don't be the person looking for the short to the trend. Just trade what is on the chart in front of us. So trend is up. obviously the next thing that we're going to want to do is always look for any sort of major support and resistance. If you just want to put the simple ones on here, mark the major highs, mark where we had lows and took nice bounces. You can even go right over here. You know, we took a nice little bounce down here. We now know we have a little zone right here. You don't want to be short down here. You know, this is just what the market is telling us. And why do I say the market is telling us that? Because we can see right here buyers winning and winning and winning. And so we want to assume as traders, when we come back to here, the buyers are likely going to continue because, you know, we did consolidate here for a few days, but there's likely still people that want to be in the market at that price. That's how support and resistance works. That's why support and resistance works. So when we do something like this, we get our couple levels. Obviously, we probably want to have this wick on here. It's probably pretty close to where we rejected today. When we have these levels, we now know, technically speaking, market's in a range. You know, the market is in a range. It's a plenty big enough one to trade, you know, $6 or something like that. But we know that when market's in ranges, we typically want to be long at these lows and short at these highs. You know, obviously big uptrend, price action's telling us that more than likely we want to be looking for dips to buy. You know, major trend is up, support is below us. We did run into resistance today, obviously, so you likely don't want to be swinging long into data tomorrow, obviously, but we're going to ignore data and just talk price action. When we have this kind of a move up into a strong resistance where we're basically, I mean, if we look at the 4-hour, we're likely put in a pretty sweet double top here. We're pushing above it in the after hours, but pretty sweet double top here. Those are the types of things you don't want to swing long into just because the trade can go against you. The risk reward is not there. And so the price action tells us up here, even on the backs of these nice push candles, we likely want to be short here. It ended up working out today, you know, nice sell off the open on that. But the market tells us we likely want to be short here, and we don't want to be long until we start to see some candles that look like this above this level. You know, and this, of course, intraday, you can trade scalps long, blah, blah, blah. You know, this is just talking big picture. The closer we get to resistance, do not buy calls. You know, Disney's a prime one. Everybody's been trying to catch that breakout. I tried to catch it myself, got a few nice trades on it over the last couple of weeks, but you don't want to be the person buying calls up here. You want to be the person buying calls down here and catching that move up to where the people are chasing it. You know, you can buy calls here. You can even, you know, buy calls on this dip here, knowing your stop's down here, but you don't want to be the one buying calls up here because that is where the rejection is typically going to come. That's what price action is going to tell us. And so the other thing that I always like to warn people about is, and this is going to come up multiple times tonight because I am opposed to them. I don't trade named patterns. I don't like named patterns. I think they just, one, they have, you know, statistically speaking, and I'm not gonna, you know, I don't want to give specific numbers, but I'll tell you right now, your favorite pattern, whether it's, you know, bull flag, bear flag, whatever it is, they have a 50% success rate. I want, when I'm trading in the market, I want my odds higher than 50-50. So that's why I don't ever put, you know, any emphasis on a bull flag or bear flag or anything like that. Price action tells us that a bull flag or a bear flag is consolidation, and you play the break of the consolidation. Don't think of it as a flag. Don't think of it as anything like that. You know, don't say, you know, that's where you start getting into those like outlandish claims that we'll see people make on trade floor. Like I saw somebody say today, if Nvidia breaks 127, it's going to 135. I think that's what it was. And I read things like that and I say, you're just making up numbers, you know, trade what is on the chart in front of us. And so that's what we do. We come to the big picture on the chart. We say, hey, we're bullish. You know, the market is bullish. Were some shorts provided? For sure. You saw the people like me, the people like, nice and vlog. It probably was. I wasn't going to say it, but it probably was. You see the people like me, the people like Tilio. I don't want to pretend like I'm even close to the trader that Tilio is, but you know, people like me, people like Tilio, waiting for dips to buy. You know, shorts are great. You know, people always want to celebrate their puts making money for some weird reason, you know. But we wait for the dip to buy because it's the easy trade. It's the low risk trade. The market, and this will be brought up a few times again tonight, the market likes to repeat itself. It likes to do the same thing kind of over and over. So if the market keeps going up and the dips keep getting bought, then we want to look for dips to buy because that is the obvious answer. You know, that's what is likely going to keep working in the market. And so, hmm, I am noticing I like to use the SMAs on the daily, just to show us some additional support that we're sitting on up here. We're way above these SMAs, but they are pointed up. We are going up, market is going up. Look for dips to buy. Don't be, oh, if, SPY breaks 547, it's going to 580. Don't say that. But if SPY can break this 547.10, maybe look for, some recent highs over here. You just want to look, where will the market likely go? 547.10? Maybe it goes and tries these highs. That's the next place where we saw, they did break it, but where buyers gave up. So if we're long, we want to go up to here. If we break that, yeah, maybe we go test these all-time highs. But don't be the person at 542 saying, if we hold 542.27, we're going to 550. Maybe we do, maybe we don't, but you look kind of foolish when you talk like that. If you look at the chart, we trade the chart. We don't trade our bias. We don't trade our feelings. I don't care if you think it's Nvidia, buy calls. It's Nvidia, like to me, that's like, I look at it in that always super simple mindset of how do we trade, Nike today. And, don't get me wrong, Nike, dumped today. And I'm going to use myself as an example because I talked it on Tradefloor yesterday. Nike got smoked. I was the one on Tradefloor yesterday saying it's Nike, yeah, sure. People are buying it, people are buying Nikes left and right. Apparently they're buying less Nikes than I thought, so everybody can be wrong, but it was an opinion. It was, that was my feelings on the trade. I didn't trade this. I'm not going to trade earnings on something like that, but that was my feeling and my feeling was wrong. And so that's why you don't trade based on feelings. You trade price action and you trade what the chart tells you. To me, I thought Nike would go up, even like we're holding, like we are at as I zoom out, just looking at Nike on the chart, this is a place where I would be trying to buy some calls for a bounce up, personally. So it's there. The technical trade's there. You shouldn't do that going into earnings. You'll get smoked, but it doesn't matter. Don't trade the feeling, trade the chart. If you message me and said I'm trading Nike because it looks like it's going to bounce here going into earnings, I'd say you're wrong, don't touch it. But my feelings were Nike was going to bounce. It was at a great place to bounce. I'd be long on earnings, and my feelings were dead wrong. That happens to everybody. I read none of your report. I just shared a screenshot of something that said people are buying Nikes, that was my DD on that trade. But avoid those feelings. That's what I'm trying to point out to you of, look how wrong I was. God, it's down a lot, and my feeling was a 12% drop on the equity wrong. That's why you don't want to hold those feelings. Feelings will also make you not stop out or not enter when you should. So avoid feelings. So we've looked at SPY. Just real quick, we'll go back daily, uptrend, things are strong, everything's looking good. How do we trade this? We have our levels, we have our trends, blah, blah, blah. Now we go into the 5-minute chart. As I said, I'm a big believer of those pre-market highs and lows. So obviously we're just going to slap one of those on here. We'll slap the lows down here. Obviously it didn't come into play or anything like that. But how can you trade a chart like this? Short time frame, what are some things to look for? And like I said, in the market, it likes to repeat itself. It likes to do the same thing over and over. That's why I like trading like ranges, because they'll likely bounce where they're supposed to bounce. They'll likely reject where they're supposed to reject. So that's what we could have done on SPY today. We knew we had these highs over here. So we come in, and that level was supposed to be right on those highs. So I'm actually going to move it down. We did that from the daily, so we knew we had these highs over here. So we instantly know we're in a range. Here's a high, here's a low. So when we come into today, price action tells us right off the bat that we don't want to be, we don't want to be long up here. This ended up being an awesome, you call it triple top, whatever you want to call it, ended up being an awesome triple top. Price action tells us right off the bat, don't be the one buying calls here. Don't be the one looking for breakouts. Don't do any of that. Dips down to support for scalps up to resistance, just fine. But price action tells us, look at the big picture. Where do we want to buy calls? Where do we want to buy puts? And we know just by looking at these candles right here, because that's what a lot of price action is. Any buy up to here was being met with strong selling volume. Again, we get, big selling volume eventually. We get some buyers pushing us back up, followed by instant selling. Well, when we're pushing up here for the third time on increasing volume, volume's a big part of trading. We see this push up here, we see a rejection here, we can start to look to get short. And this is the really great part about price action. It's something that I wish, and I try to lead by example. You guys have seen it in my tab. I'll take stop outs quick. If the stop out presents itself and it's supposed to happen, I take stop outs quick. I don't approve of trades that go down really, really bad and come back to green. I'm happy for you, but that you made money, but the risk reward is so horrible on trades like that, that if you always take those, you likely won't make money. Just a quick example, if you take a trade and it goes down 50%, that contract now needs to double. It needs to go up 100% to get you to break even. It then needs to go to 50% green to give you a 1-to-1 risk reward trade. And if you are exclusively taking 1-to-1 risk reward trades, then you need to have an extremely high win rate to actually make profit. Bare minimum, you need to be hitting about 70% of your trades right to actually make profit. And I think people should aspire for a higher win rate than that, but don't set yourself up for failure. If you have a 1 risk 2 reward and that's what you do, you're making money when you're right half of the time. So quit letting those trades go on you. And so this is one, we're just going to use this trade. And this is how we're going to kind of do this class. I'm going to talk about some of my examples, talk a little bit about price action, and we're just going to look at the charts and some of the things that I look for when I'm reading price action throughout the day. So we know we're setting basically a triple top. I mean, you can even short this one if you want and you're quick on the draw, and your stop's just a close at new highs. That's it. Very little risk. You're only risking a little bit of money on it. The entry that I personally prefer is waiting for this candle to close and then this one to open. And I'm going to try to enter somewhere around the close of this candle, the open of this candle. And why am I going to do that? Because we see the buyer volume dropping. We see volume and buyer volume dropping off on this push up, coming into a triple top at what we assume is going to be strong resistance. So I look for an entry here. This candle tells me, hey, sellers are showing up. So the entry is here. The loose stop is going to be a close way up here, and I'll probably hard stop if we look like we're pushing over that. The other stop is just going to be right here. Similar risk to entering up here, but this candle here gives me more confirmation that we might be going down. If you're into trend lines, obviously I'm pretty into trend lines. I'd be having a trend like this somewhere too, knowing we're going to open outside of that trend. It's worth a shot. This isn't a trade that this isn't a trade that I took today. Again, just to be clear, just to kind of bring it back and show you guys what I would have been looking at today. So price action tells us you likely don't want to be long up here, so we're short up here. Works out great. Obviously, if it was me, I'd be all out of this trade as soon as we get to the support level. That's what you want to do. But you always want to look for repeatable things like that in the market and trade around those repeatable things. As all of I teach, and you've all, and most of you, I've seen all your names in my classes a bunch. Shout out all of you for always being here. You don't need to catch the whole move. You want to catch part of the move. So don't care if you sell early. You don't care, about any of that. You just want to catch the whole overall meat of the move. And so that's what we try to do with a trade like this. At least, that's how I try to trade it. And We know the market mostly ranges. So, statistically speaking, the market spends substantially more time ranging, especially intraday, than it does trending. So, we have these intraday trends, but they often reverse. They're shorter trends. They aren't going to be those like all day running trends. I don't remember the statistics specifically off the top of my head, but I think we get just an all day up or down trend in the market less than 10% of the time. So breakout traders have a hard time when that's not really happening. And so we see our trend break here, really nice trade. Then we come down to support here and we don't get a lot of information right here of what the market wants to do. However, we start to do something that I think is very, very important. And I talk about them a lot. Flips talks about them a lot. We start to form inside candles. So, just to, this class is including everything I've been teaching. When we talk about trends and we talk about ranges, the market is a trend will always turn into a range and a range will always turn into a trend. That's how the market works. So inside candles, and what an inside candle is we have a high and a low on this candle, and these next few candles are all within it. So this is the market making a decision. It's something that something that I always look for in the market is any bits of consolidation. We then know that the market is going to make a choice. It's either going to reverse this little downtrend we have right here, or to the upside, or it's going to break down and move us down to lows of some sort. So how does this help us as traders? How does this help us with price action? The price action is telling us inside candles are printing. Market is ready to make a decision. You'll hear me and Flips talk about inside candle breaks all the time. How you trade something like this, and these can be riskier trades and kind of due to something that we're going to touch on a little bit later. But these can be a riskier trade because I'm frequently going to buy mid candle when we break the previous lows. I want to be short if we're really, all of a sudden we've had some nice consolidating volume. I'm going to be watching something like this. If we break down, I'm short. If we break up, I'm long. I am looking for nothing more than a scalp on a trade like that. Maybe the trend continues, but if you can get 1, 2, 3 good candles in your direction, that's really all you're looking for on a trade like that. It's something that I take these trades all the time because they will frequently happen. We even have another example down here. We're going to get into some of these, but I'll take trades like this all the time. It's how I look for those bottom area bounces or those top area rejections, is looking for inside candles forming because it is the market making a decision. And so you want to read candles. And I'm always careful when I say this because you want to read what is the candle telling us. Because Rudy, I see I have a couple questions here. I stop out based on levels and I use a limit order and I typically don't have a hard stop waiting. I use what's called a protective stop, where it's the maximum amount I'm willing to lose. And if that gets hit, that gets hit. But I use a mental stop. So if we want to go back to this trade, if I enter here, like I said, my stop is really going to be a close anywhere up here. Maybe it rejects again, but I don't like to let the market go against me too many times. So I'm going to just be up here. And then when we close up here, I just limit order out. I don't like to use market orders because you don't know what you'll fill at. And you typically get a worse entry and a worse exit when you use a market order. So I'm just a big believer in limit orders. And then on Thinkorswim, when you use an active trader, you can place the limit order and it'll just pop the line up on the chart for you. So you know where that stop is. So I use that all the time. Rudy, so good question. This one right here, I wasn't going to talk about it, but because you brought it up, this is the opening range, or the opening range is down here. So this is a rough short because the opening range is here. So you want to be careful. You want to be careful about this because you're exactly right. This is where the bounce could come. And we did take a little bit of a bounce, but this is still a reasonable scalp. If you short here, your stop is just back in here. You're really only going to be risking, 20 cents, 25 cents on this trade is all. If you really get blown out, 40 cents. So that's why I like a trade like this because the risk is low. So I don't love a short near this close to the opening range. This one ended up working out, but you're looking for, 40 cents a downside and risking about 20 cents a upside. Worst case scenario, 40 cents upside. So you're somewhere in that 1-1-1-2 risk reward. So I still like the trade. However, then when we come down to this bottom of the opening range, we're outside of it, but we begin to consolidate. This is where price action is awesome for us. So something that we want to read the candles. What are the candles telling us? And what we are seeing on these candles, first thing that we're seeing, and we're going to kind of cover a few different ideas right here. The first one that we're seeing is, so we have a trend reversal going on here. And something that I like to tell people to look for, and you don't need to have both of these, but when we have heavy selling, some consolidation, followed by more heavy selling, these two big candles. And this is a great example of this. And I have another one that we're going to zoom to after this. This is a great example of this, of something that in the world of price action is called an exhaustion candle. And people might, I'm sure some of you have heard me talk about them. I talk about them relatively frequently. And what an exhaustion candle is when you see selling, big selling, the biggest selling, and then you get this turnaround candle. Well, that's what you want to watch. You want to say, okay, all of a sudden buyers showed up. And then you look for consolidation because often an exhaustion candle is going to lead to one of two things, a trading range or a reversal. So an exhaustion candle can be one of the very first signs that the reversal is coming. So that's what we had today. And then well, I'll put it on here because, we're talking about, this was the first trade that I took, let's see. This was the first trade that I took today personally. 20. So everybody knows I love the hourly 20. So we sell down to the hourly 20. We've broken out of the opening range, but we start to consolidate. We have big selling, eventually get this exhaustion candle, followed by some consolidation with another breakout, followed by two big candles. The two biggest sell candles of this whole sell happen right here. At this point, I start to say, okay, this could be the exhaustion candle. Now we see a bounce. And what does this candle tell us? We can't see it now because it's printed, but this low down here, this is where the candle opened. At one point, it was ugly. I mean, this was a solid red, full red, bearish candle that ended up turning green. So this is the first sign that sellers are giving up and buyers are showing up. Then we get consolidation, more consolidation, but some buyers showing up, followed by a reduction in volume, a hold of a 20 EMA, and a break of trend. This price action got our eyes keyed on a reversal just from this going on. Same, could have been up here. Like I said, if this breaks, short it. It works both ways. Well, now, as the price action has told us a potential reversal is coming. We also have a trend break. We're also holding the hourly 20 right here, which is bullish for us. We haven't broken the range, but this offers a really nice entry here. Stop down here. Looks like you're risking 40 cents, 30 cents. And then, that's your wide stop. Tight stop is going to be just a break of this. If we are closing under here, you stop out. So we see our exhaustion candles, potential exhaustion candles, because sometimes, exhaustion candles can turn into trading range followed by more dump. So it was in fact not an exhaustion candle. Next push down, we got a trend bounce, we got a trend break, consolidation, moving up. Next one we have here, this is now another entry according to price action because we've broken outside of the range. So you can take that early entry, stops below you, or you can just wait for the candle to close, knowing your stop is still down here. If we got a big old explosion, obviously price action says you do not chase a trade, never, ever, ever chase a trade. If someone chases trades, don't listen to them. If they're like admitting, oh, I chased that, don't keep listening to them because they're chasing and that's bad. And so look for your entry here. Price action says it's fine. Now we continue to read these candles. Buyers showing up, closing near the highs, very small wick on the bottom. That's something that I always look for. We read the candles, closing near highs, small wick, keep pushing up. We're, we aren't even breaking halfway down into this candle. So this tells us, okay, we can stay long. Here's our first sign of sellers. So price action tells us when we see these sellers show up, ratchet up that stop right there. Ultimately ends up pushing for us. And then we go into consolidation. So you want to exit the trade. There's no reason to stay in that trade. You can catch some scalps off of here, but that's really not for anybody else, or like that's not for most people. They don't like to scalp these individual candles, they'd rather just call it premium burn and not trade, and so always look for any sort of exhaustion candle followed by consolidation. Here's another one, selling, bigger selling, that we end up breaking lower, but I wanted to bring this one up, and I have another example we're going to go to. And this one isn't perfect, but this is something that I always encourage people to look for. The market likes to do, and this is something from Al Brooks, obviously I'm not the one to figure this out, what's called 3 pushes. So I'll frequently look for something like this at a bottom. You can look for them at the top, and a third push down, we have a strong push, another strong push met by buying, and then we have, another strong push here. Anything after here is reasonable entries long because your stop is going to be so tight. Some people will call this a 3 push wedge, things like that. But always look for something like this because this is where you can frequently find a bounce. It also lines up, reading our price action, double bottom, 3 pushes down. We look for calls down here for any sort of breakout up. This can be just a really wonderful way to trade. And then I was going through, but it's probably on this one. So I was going through and just looking for some other examples of this. Right here, we have a very nice 3 push wedge. This is, you could have extended the trend out and this would have been your first touch, your second touch, your third touch, looking for calls here. Obviously, pretty tricky entry because this one ripped, but this shows something that I like this because when we see a 3 push wedge like this, oftentimes the market, and something that I teach a lot, the market likes to convince you that something is going to happen and then do the exact opposite. So oftentimes people will be looking for this breakdown, but frequently when it's the third push, you buy this breakdown and stop out if the candle stays, anywhere down at those lows, but you buy this breakdown because it can frequently be met with a big bounce on it. And this is something that happens over and over and over again in the market. I mean, you can find 3 push wedges is what Al Brooks calls them. You can find those trades basically every single day. This is obviously a little bit different than the statistic that I teach all of you of 80% of breakouts fail. But very powerful tool in price action. There was even one, if anybody knows Vernon here, he's a big price action trader too. And one of them that we were talking was the big sell back here. It works, great on longer time frames. We were looking, and you can go find my thing on the in trade floor. We talked about this somewhere up here, and I said I'm looking for the third push down on the wedge with the fake breakdown. And that's exactly what we got. That was ultimately met by huge buying. So these happen all the time in the market, that they're just a very common thing that goes on. And so I like to look for those. You can find them again. This was another one that, and I'm just going back, like, who knows if I traded this or anything like that. Look for things like wedges at lows and try these trades. They frequently work. Really, if you want to be super technical on this trade, you aren't looking for a huge move. You're looking for a couple of candles, but with your top trend, if you're entering here, you're looking for a scalp to the trend. This one ultimately broke out and ran for you, but always watch for these 3 push wedges. And so, let's see. We kind of covered that. There you go, Rev. Love it. Yeah, Rudy. So, okay. So what I mean by 3 pushes is literally just, and I typically count the first where the trend starts. First push down, second push down, third push down. So this one I really liked because it's doing another part of price action that I love. And so this is what's called, and this is again an Al Brooks idea. He calls them a signal bar or an entry candle or a reversal candle. Oh yeah, I can't believe you remember that. I didn't say that word though. You said that word. Um, yeah, can you great question. Great question. Can you use it on a stock going up? Absolutely. I didn't, let's see. I mean, I didn't find an example of one because I kind of just went through, I think I only went through like maybe 10 days or something. I was just trying to find recent things we could relate to. Let's see if we can find a nice little 3-push wedge on the upside that ends up rejecting down. Here's an ugly one. I still don't really like that one. Yeah, I don't like that one. I'll keep my eyes peeled for one though, as we look at a couple other charts here and see if we can find one. But I wanted to come back to, did I lose it? I wanted to come back to, we'll just do today. To cover another thing that I really like. And so what these are Al Brooks, he calls them a signal bar. It's what we talked about here with this consolidation, where you want to see something happen. And the signal bars that I personally love, most people, they'd call it a hammer or something like that. I dislike named candles. Well, other than one, which we'll get into next, I dislike named candles even more than I dislike named patterns. The success rate of a you know of a named candle is just pitiful. I mean, it's just not good. Plus they got weird names and stuff. And so, I don't like name candles, but I love looking for a signal candle, a signal bar. And so what do I mean by that? It is something that tells us that, you know, one side is giving up and the other side is winning. So we don't necessarily want to like buy the signal candle. We want to wait for the next candle to print and say, is this offering an entry that I like for me? And so like I said, my favorite is a hammer. And we look at something like this and we see consolidation, we see inside candles, whatever it may be. But if we go to a longer time frame and we zoom in, we start to see a very different picture where we had our consolidation happening and our inside candles are now very different. We had heavy, heavy, heavy selling. Here is the first sign of buying price action wise. So if we use our hourly 20, you buy it, and the hourly 20 is the stop. And so when we go to this longer time frame, all of a sudden, what we were looking at as just some inside candles and some consolidation, but the first sign of buyers showing up, all of a sudden we see strong buyers and a breakout candle. All consolidation will lead to breakouts, whether up or down, we don't know until it happens, but always look for that. I think I even had another one of these. Could have been this one. We'll try this one out. So again, heavy selling into inside candles. So what do? We look at these candles. Is this a hammer? Maybe. Is this a hammer? Maybe. I mean, I don't name them. I look at the candle and I say, okay, at one point, this candle that is just inside candles on the 5-minute, this candle was extremely bearish at one point, and it ended red, which throws a lot of people off because they say red candle means we go down. This is where you need to start paying attention to the other parts of the market, specifically the volume. So if we look at the volume down here, what was once a very red bearish candle ended up with just under 2 times the buyer volume of the seller volume. That is a sure sign that a reversal could be coming. So now this is our signal candle. We want to watch how this next candle plays out. Do we buy the dip down and treat it as a double bottom? Do we just wait for the breakout to come and push us over it? That is all up to, trade by trade basis, but we see it down here as consolidation. When we go to the longer time frames, there will almost always be a signal candle of some sort saying, look for a trade. And take that trade. That's all we can do as traders is try to take those trades when they come. So for me, that is the most important part of reading price action. Looking at a candle and saying, what is the candle telling us and what is the chart telling us? Something like this, we got ourselves a little 3 push down wedge. We pushed below it, ultimately ended closing above it and got long right here. And so that's where our 3 push wedges. This is our not a good signal candle, but with a double bottom working for us, buyers showing up on this candle, still falling short of the sellers, obviously, but we look for an entry here. You can always zoom out to those longer time frames, see if it wants to tell you anything different. I love looking at all of these. Such a good one. I love looking at all of these. Potentially an exhaustion candle pushing down. I mean, if you were really on it, you could probably even make a little argument for some sort of wedge down here. Didn't work out perfect. Very nice setup for you to try. And if you short these, you have to think about, where's my stop? My stop has to be somewhere up here, some of these lows. If I long these, my stop is right here, 10, 20 cents. That's what price action does for us. It gives us great entries, minimal risk, repeatable things in the market. It's just super, super simple. Oh, Agent J roasted me. Oh yeah, because you asked me that. I forgot about that. I did say it technically, but it went private. Right on, Omar. Thanks. Thank you for being here. Yeah, T, love it. And so that's, let's see if I got any other notes. I mean, those are my notes. The main things that I really wanted to teach about price action was, look at the big picture, figure out, am I buying dips or buying call or, buying dips, selling rips? What am I doing? And then what is the chart telling us? Maybe you like to trade those ranges and you look for the double tops and double bottoms. Maybe you want to start looking for these wedges for bounces. Maybe, these are all, maybe those are the things you like to trade. Maybe you sit around and you wait all day for those signal candles to print, some sort of reversal candle, anything like that. Look I found you a 3 push-up wedge here. We got our first touch, we got our second touch, we got our third touch, which ultimately ends up giving us an awesome entry when you can line it up with an EMA, anything, this is that hourly 20 EMA, anything like that. Really, really awesome entry on the 15-minute. Let's see. Oh yeah, honestly, great one on the 5. This one kind of pushed up, but nice third push on up to look for that short entry. And then this one even gave you that the double bonus of you had a nice target. We broke down, more confirmation to hold, as we've learned over and over again. Trends always turn into consolidation. Let the consolidation ride and ultimately get more breakdown there. Nice, just super, super simple. Look for, if you're in a trade, start to look for some of those trend candles. If you're long down here, you don't necessarily want to see candles like this. You want to see candles like this, very small wick on the top, small wick on the bottom, big body to the upside. Candles like this, tiny wick, big, big body to the upside, and start using those for, your stop outs and your take profits, whatever it may be, and just trade the chart, and use price action to your advantage. If you got resistance, if you got a trend, if you have, your first sign of sellers showing up, you can look to short these things with very tight stops. Same thing down here, if we're pushing up and pulling back down, maybe you started the day with a trend like this instead, and you're buying, the first pullback. Great. Buy your first pullback, stops below it. Look for previous highs. Always use what is on the market, and what is the market telling you? Because you can have, I should have pointed this out. Here's a great one. This is a great signal bar right here. Was extremely bearish, likely an exhaustion candle, but extremely bearish, and ended up turning really, really bullish. And then the next candle doesn't do anything for you. And the next candle doesn't do anything for you. So if you long this, maybe you do eventually get that breakout, but the context of this says, well, we did have a signal bar. We were unable to break its highs and hold it. multiple times. And so, context was bad because we didn't get that good move. You want to start to see those moves on the next couple candles. You don't want to enter on the close of this signal bar and have that very next one closing halfway down the candle. That's not the type of trade you're looking for. You want to look for a signal bar that the next candle tells you to enter. That's the thing of price action is you got to sit and you got to wait and you have to let that price action work out for you. And then when it works out for you, you take your trade. Right or wrong, that comes with the trade, but your entry, your stop, your reasons of why you're entering those trades. And so that's when you take your trades. Yeah, and that's all I got for price action. So any questions? We ran a little late. We got 6 minutes. So any questions that I didn't get to? Let's get to them now. The 2-color volume bars, that's a DM, but I got them pinned in my tab. If I don't have them pinned in my tab, Toasty's got them pinned in his tab. Oh, we got the junior banker in here. Well, is there any statistic on how many consolidation candles form? Yes. And this one goes back to the other one that I teach all the time. 80% of breakouts fail. So when you start to see consolidation, it's not going to be uncommon to see, your 1, 2, 3, 4 tests up or down, even this one, we're seeing testing. So really you're going to be looking for 3 or 4 tests before that breakdown comes, just like any other breakout or breakdown. The 3-push wedge gives you the scalp opportunity. If you're really looking for the breakout, it's typically going to take that. So very good question. Good question about chasing. So chasing is wrong 100% of the time. If you're getting in a couple bucks over, somebody else, that's fine. Don't get me wrong. But if someone's up 10 or 15%, some trade that somebody's talking about, don't take that trade. And if somebody's like encouraging you to take that trade, don't listen to them. However, there is times where you want to be buying the dip or selling the rip. I have 2 good examples of it right now. For the buy the rip, it was shop. This is extremely rare in trading. I can't say extremely rare. I call it a tight bull channel. This is buyers. So, maybe you don't get in the first day or second or third day. This goes up, pulls back, buy it, pushes up. Any pullback on price action like this, we're seeing strong buying every single day. You buy all of these pullbacks. You get in the market. You want to be in the market when you see price action like this. But this is looking at it on the daily time frame. If you go into longer, a longer amount of time, I wonder how far back I got to go to get to that now. If you go back further and you actually look at, the chart, you don't want to just be buying the tops of green candles. You want to every day look for a pullback, buy it, pullback, buy it, pullback, buy it. As soon as we see, here we go on shop right here. Awesome signal bar. Look to buy above this, stop right below there. No problems, buy, get in the market. But setups like that are very rare. So you never want to get in the habit of thinking the market moves like this because it does not, it does not. So that's like a time where, I'm not saying it's, big picture, you feel like you're chasing because right up here, it's already up 10% from the lows, but you're still buying those dips intraday because the trend is so strong up. You just want to get in the trade, A good question. On opening range trades, the main things that I look for, if I can have a double top or double bottom, I'm taking that one. I will always take the double top or double bottom trade at the opening range. But the main thing that I look for, and you guys have seen it in my tab, because sometimes I'll say something like, something along the lines of, we are coming towards the top of the range, but there's very strong buyer volume. I'm not like, if there's not a seller in sight, then I'm not going to take the opening range short or, the opening range bounce if there's no buyers in sight. I want to wait for something like a signal bar to say, okay, there they are. They've made themselves known. Buyers have showed up, sellers have showed up. Now I want to take this trade. And then if you have some of those additional confirmations, your EMAs, your hourly 20s, VWAP, whatever it may be, those can help, but you want to have a reason for taking the trades. It can't just be, opening range, low or high, and that's your only reason, because you can get blown out doing that a lot, and the other thing to remember is on days where we're really dumping, you can see I just put the opening range on here real quick. This opening range paid, this was a nice bounce. I might even caught this trade, but this was a nice bounce. But it ultimately failed. So you need to be ready to admit you're wrong if you don't take the scalp. That's always something you need to remember, is if you're fighting the trend, it's a scalp until it's not. Obviously the people who waited on this trade, right down here, and we looked at this one on the 15-minute. You get the trend break. We had a nice signal bar print for us. And then you look for that breakout, break back in, your stop moves to here. And then you trade that price action. You say, if we're getting big pushes up, we're moving our stops to here. More pushes up, moving our stops to these lows. One more push up, I'm likely moving my stop here and getting stopped out, because that's how I trade them. But you always want, a few things in your way. Yeah, yeah. And then that's another thing. This is just another little price action thing of if we have a strong breakout or breakdown, and the trend is up, or down, whatever it is. So say, and I'm just drawing a trend. So we pushed up, here's our trend. You want to buy these first, like, I guess actually I better make this more accurate of how I would have had it drawn. This would have been it. You want to buy this first pullback to this trend with a stop on a candle close under these lows. If we're getting those first pushes back into it, buy this. Second pushback, buy this. By the third, fourth touch, sometimes you'll get something like this, but by the third or fourth touch, you can start to expect some consolidation, maybe a small reversal. Of course, sometimes it can continue, but once you started touching it a few times, that's when you get more careful buying it. Puts for T, I know. I mean, I'm wondering if this is a joke because I'm in them and I'm scorched, but no, this is dip buy mode still for me. I'm not going to be short T until I'm not going to be longer term short T until we really see some selling. And I really wouldn't even feel comfortable selling, really shorting it until down here. I did short it a couple days ago, probably this day, Monday, and missed my sell on Tuesday, unfortunately. And so now I'm stuck in those things. They ain't looking so hot. But T definitely not where I would personally be short. And again, this price action tells us like buyers are smoking us. We're getting some consolidation. Maybe you can play the breakdown or the breakout, but I'm buying dips on this thing. Yeah, honestly, Walmart kind of the same deal. I mean, I'm not buying calls like here, but we get a pull back to this trend. I'm likely looking to buy some calls, for sure. That's where I'd be looking for it at least. But until we break this down, I still wouldn't even love the short. Maybe you could get to some of these lows, but being dip buy mode, I mean, people are liking Walmart, so inside candle today. But really, that's not where I'm short personally. Visa. Ooh, let's see. You getting that today? I mean, let's be real here. You buy calls on this, you're risking it though. I mean, this thing could gap tomorrow down on the wrong data, but of anywhere to take a shot, price action tells us right here is the place to take a shot. Technically, the fourth touch can be risky, but not a bad one to take the stab at. Yeah, could go to that 200. I'd stab there again long too myself. But this would be the place to be long, stop below it. Next stab would be here. You could always take that short too, but I still don't love it. A lot of consolidation going on right there. Unfortunately, this lecture will not be posted tonight. I wish it would, but thank you so much for that. Oh, there you go, Chuck. Okay, good deal. Good deal. I wouldn't be offended anyway if it was, you know. But yeah, nice hit on the calls. I mean, it ripped, you know. It's been on a ripper. Okay, Junior Banker. I see people trickling out of here. Thank you so much for being here. We ended up with a great crowd tonight. Thank you for all your questions. You all are awesome. You all are awesome. And price action, it's hard, you know. I was I was almost considering doing another price action one next week to go into more detail, but you know, and other things, but still it's a lot. We'll let it soak in and we'll hit another one soon. D-Dog, I ain't long. I mean, it is breaking this trend, but I ain't long there. I'd be long on a break and retest though. Right on. Thank you all so much for saying that. I appreciate that. I love teaching these classes. I love the participation I get. I'm lucky I get pretty good numbers most of the time. So I appreciate that. Uh, it's fun teaching you guys. It's fun working with all of you. As all you know, my DM's always open. Shoot me a message. Don't be scared to tell MMA you like the lectures. Okay, well, if that's gonna, oh no, we got a few. Right on. Yeah, maybe we'll do another one soon. I'm thinking trade and psych next week, but maybe we'll do price action the week after that. We'll see about that. Right on, dude. Ty, happy to have you in here. Good to see you. Yeah, Elijah Husky. I want to say your name, but I'll probably ruin it. Nice looking A name though. Thanks for being here. Right on, everybody. Okay, if that's gonna do it, thank you so much. Have a great night, and we will talk to you all soon. Thank you. Raphael, my man, thank you. Thank you. We'll see you guys soon.